In the energy quadrant, the July crude oil contract, which had a good rally going, paused a little bit here today over the last three sessions. WTI crude futures, the July futures, are up about 4.38%. We're essentially flat today, up about 10 basis points, but still above $66. The high today, 66.51, was up 74 basis points. The earlier low today, 65.41, which was down almost 1%, about 92 basis points in total. There's a lot of demand optimism out there. Fuel demand globally is rising with the reopening of major economies in Europe and higher travel numbers in the United States, which is inching closer to pre-pandemic levels. The TSA, the Transportation Security Administration, reported 1,863,697 air travelers throughout American airports on May 23rd. Now, that's the highest number since the pandemic started grounding flights in March of last year. But it's still about 32% below the previous March. So we're still way below those pre-pandemic levels, but we're inching closer and closer and closer every week as the U.S. gets more comfortable with being partially to almost fully reopened. And again, we're starting to get that in Europe with inter-EU travel being almost completely open by now. So the demand for jet fuel is definitely rising, and general fuel demand in terms of travel demand is rising as well. Now, rig counts in the U.S. are not showing that much of an inclination of putting any supply in front of that demand optimism to kind of calm this rally. If we're going to get supply, it's likely to be out of OPEC or even Iran, but the Iran nuclear deal talks have also stalled a little bit. So a lot of Iran's oil is already on the market, so might already be priced in, being put on by sort of different means rather than normal international legal channels. But U.S. rigs are on a slow upward trajectory, up 6 of the last 9 weeks. They're also more than twice the pandemic lows, which was 172 rigs. We're sitting at 356 rigs this past week. They're still nowhere near the all-time record high of 1,609 rigs set in 2014, or even the recent 2018 highs of 888 rigs, but it is moving up. It is moving in the direction of providing a little bit more slack to the supply part of the supply-demand curve, but certainly not enough to slow this three-day rally any more than the pause we've seen today. We'd have to see some demand weakness for this rally to completely peter out.